Hello guys. Welcome to today's webinar. Today's we're going to focus purely on the non-farm payroll which is going to uh release about like half an hour later. So we will also watch the views of non-farm payroll together in the today webinar. Hi, Naisla, yep, hi, welcome. Arya, hi. Christine. Oh, hi, Anna. Hello from France. Bonjour. We will wait for another several minutes, so that we can wait for more people to join us. But while we are waiting, maybe you can type some questions if you have. If I'm able to answer you, I'll do so. Hi, Matthew. Sure, right? I guess some of you here are very excited to the non-farm payroll that's going to release later. And maybe you also can type your thoughts on the chat box to share amongst all the participants here today. Hi, Seagans. Oh, a questions from Matthew. Um, gold is going to 2050 or 1999 and below. Wow, that's it's a very good questions. We'll discuss it later. Also, we will analyze some of the chart. But if you ask me, my bias is leaning towards that the non-farm payroll later will maybe come short. So it is a good chance for gold to go upwards. But whether or not to touch again 2050, we will have to wait and see the momentum later after the NFP release. I think the chance for it to go lower than 2000, this very crucial psychological level. I mean there's still chance, but maybe the likelihood is not so high. Yep, let us see. Okay, hello guys. Hello Lalu. Hi Wanda. Maybe we'll just wait for another 2 minutes, right? Hi, Fakru from Malaysia. Are you guys have already have a position before the NFP, or are you guys going to, prepare to trade on the news? Hi, Christians from Italy. Is it like buongiorno? Matthew, are you mean you're going to sell on Go? Oh, ciao. Hello. From Muammar gold signals. Yes, I cannot like give you a signal directly, but maybe we can discuss a little bit during the webinar. Rama, gold sell, but waiting for a spike to 2040. Wow, this is a very interesting trading idea. So you will wait until it goes to 2040 and then you open a short position, is it? Manipulation yesterday, DXY, the move. Um, s- so I think the movement for across various of the asset class is quite sideway. Because I think now everyone is just wait for the NFP. So my wild guess is all the asset class, including equities market, including gold, including dollars, oil, the movement will be quite minimal before the NFP release. Yes, less risk with the volatility. Yeah, very good risk management from Rama. Entry after data release. This is actually a very good strategy from Fakrul, if I call your name right. Because my practice, I always trade at least the second candlestick after those the news or economic data release. This is my practice. I don't always trade straight away after those things release. Hi, Fasiko, Hadiel. Okay. I guess we shall start now. So before we start, allow me to read out the disclaimer for today's webinar, right? Today's Market Insight webinar is intended for educational and informational purposes only, and participants shall not take it as financial or investment advice nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. PU Prime and I hosting the session are not liable for any losses or damages resulting from the use of the information presented today. Participants are responsible for independently verifying information and considering their own financial goals and risk tolerance. Okay, this is the disclaimer for today's event. So once again, welcome all to attend today's webinar. So as you can see on the title, so today we will focus on the non-farm payroll. Of course, I don't know how many of you here are a veteran, have long enough of experience in trading, and maybe some of you are a new trader. Of course, we welcome you to join this big family. So this will be the agenda for today. First of all, we will briefly discuss with you guys what is non-farm payroll, what is the NFP. I think all of you, if you are trading with the CFD, if you're trading Forex, I think definitely you will come across this word NFP or non-farm payroll. Okay, and also after we know what is it, I will try to analyze some of the recent data trends, especially focus on the US economic data. So from the past US economic data, you can do your own analysis. You can try to have your best guess on what's the numbers going to come out later. I think half an hour later when the non-farm payroll list. And after that, we will also discuss on the potential Fed's monetary policy after the non-farm payroll release. And if you have time, before the non-farm payroll announced, I will try to discuss with you guys the recent trend, like including the DXY, including gold, or if you want oil. Okay, and then after that we will watch the result. Okay, we'll watch it together. Okay, so decoding the non-farm payroll. So yep, this is like one of the most famous or most popular piece of economic data. If you are a Forex trader, so it release on every first Friday of the month. So today, I mean, now we are in December. So later on, we will get the non-farm payroll for November. Okay, and maybe some of you guys might feel peculiar, like why is it not on 1st of December? Okay, because the first Friday of December it falls on the 1st of December, which is last Friday. But unfortunately, because we have the what's it called, the festival, I think Thanksgiving. So we have Thanksgiving, and then maybe the labor departments of US, they cannot rush out the reports. That's why they postpone the non-farm payroll to 2 days. So later we'll get to watch it together. Okay. So first of all, let me introduce you what is non-farm payroll. So the non-farm payroll is the change in total number of paid workers in the US, and excluding those employed by farms or those who are work with the government or private household and non-profit organization, NGOs. Okay, so this is like not the total number, of the, like the total labor, is the total the change in the total number. Okay, so when you see an increment, it means that basically it means that the economic in the US is better, so they need more labor to do the jobs, So there's like no rules of thumbs, like what is the number, it means that the economy is good, or what's the number, it shows that the economic is like it's not so good. Okay, it could be like above 200,000, or it could be like 300,000, because imagine yourself like in 2020 when we have the pandemic, when like a lot of people losing their job, and then after like in 2021 when the pandemic and the situation is getting better, the development is getting better, so more like a lot of people got new job. You can imagine the non-farm payroll, the number can go to like above 300,000. So of course it does tell us, yeah, the economy is like recovering very, very well. But of course now we know previously the Federal Reserve tried to tame the inflation. So they have a lot of measures, especially in terms of monetary policy. What they do is they try to discourage more economic activities. So it is logic to see the non-farm payroll, the number, to gradually go down, because this is what the Federal Reserve or the US central banks want to see. Okay, so normally when we look at the non-farm payroll, we will just do a comparison. We cannot say like, oh, above 100K is a very good number, it means that the US economy is doing very well, or like below 100K, oh, it's going to harm the strength of the dollar. We have to go to short it. Is we don't look at that way. What we do is we compare. We compare to the previous reading. We compare to the market consensus, because every time, especially if you go to investing.com, we will have this economic data calendar, and then over there we will always have this forecasted number. So normally we do analysis by comparing the forecasted number as well as the previous reading to and after that we'll give the best guess to gauge what's the next numbers going to comes out, and also we strategize our trading plan and see what's the trading opportunity that we have. Okay, and of course this is US economic data, so and also it related to the job market. So obviously it will have a very direct impact on the US dollar, but we have to bear in mind this. I think about 90% of the CFD trading or the forex trading involved in US with USD. Even like if you are trading with gold, if you are trading with oil, all of them are denominated in USD. So if you look at NFP, it impact on the dollar, and if you impact on the dollar, it impact on, I would say, almost at the entire forex market. So the NFP is very, very important. Everyone's going to discuss about it. Okay, and just look at the number over here. The economists expectation for the November non-farm payroll will be 180,000, 180K, and also the previous reading was 150K. So they are expecting an increase in the non-farm payroll. So if this comes true, or is even higher than 180K, you can guess what's going to happen next. It will boost the dollar strength. You can expect the DXY, the dollar index, to goes up. Okay, and then after that we will discuss later what is the impact on others asset class if you see the DXY, the dollar index, to actually goes up. Okay. So moving on, just discuss with you what is the non-farm payroll and what is the implication to the economy. So like I say, why I put this red downwards arrow is because what the Federal Reserve did was, since March 2022, there has been aggressively lifting the interest rate level in the United States. So why are they doing this? Is because at once the inflation rate in the United States has gone nearly 2 digits, like double digits. So it is like not very, it's definitely very, very unhealthy. Okay, it's like harming the people life actually, because you are paying a lot more to get the goods or services that you need or that you want. It is like people are suffering, so they don't want to see it. So what they do is they lift from zero interest rate up to more than 5% now. Now at the moment, the interest rate level is at 5.25 to 5.5. Okay. But until now, at the moment, the market speculates that the Federal Reserve are actually happy with the interest rate, happy with the work, because they do see the inflation rate in the United States has like gradually coming down. Of course, it's yet to reach their goal. Their favorite interest rate level is at 2%. And if you look at the previous CPI reading, it was still at 3% or 3.2 if you look at PPI. So their job is still not done yet. So there's still chance for the Federal Reserve to again lift more interest rate in the future. But what if the NFP really come no lower than the previous reading, which means that the job market in the US is like gradually cooling down, and then what's gonna happen? So when you see that the hiring activity going down, it means that they have two implications. One is on the business perspective. So when the business is not doing so well, and when you don't need additional labor, additional workforce, you will hire less. So this is from the sides to tell you that now the economic is slightly slowing down. So you will not need additional workers. And also on the other perspective is from the retails, is from like a general consumer. So when lesser people getting higher, lesser people getting paid, what will happen is they have lesser money to spend, like in the general markets. Lesser people will have lesser income to spend. So from there, it also means that the economic is gradually coming down. So the ultimate result, from the slowing down economy, slowing down personal spending, it will result as a lower inflation rate. Because like you imagine, like imagine you have like one bread and 100 people going for it, the price of the bread will goes up. But now maybe just like 10 people's going for this one bread, it will increase, but the bread price will not increase as high as if you have like 100% just going forward to grab this one bread. Okay, I just give this a very lame example. So if less people are getting higher, less people are getting paid, and also our economy is going down, so you can expect the inflation will gradually go down. So this is, of course, definitely the Federal Reserve want to see. So if the inflation is going down, they will not going to increase further interest rate. And we know the price of the currency is the interest rate. So when the interest rate is not moving upward or even reduce, you can expect the dollar to gradually losing steam, and it will start to depreciate slightly against its peers. Okay, this is what's going to happen. Okay, moving on. This is, I guess, what we really want to know and want to discuss today. What will happen later on? I mean, another like 15 minutes later. What's the NFP is going to comes up? Okay. This is the table that I did, focus on all the past economic data that will relates to the economy and also relates to the job market. So we will just discuss it like one by one. We can go through one by one. So first of all, this was the previous US initial jobless claim. So you can look at the number. It is actually Of course, it's slightly lower than the forecasted number, but if you compare to the previous number, it have like an increment. So what does this mean? This is like a jobless claim. So people are jobless, and then they will go for the the benefits, the claims. So this shows that slightly more people are unemployed in the US. It means that it's loosened. I mean, the job market is like loosening a little bit. Okay, moving on the retail sales. So retail sales actually are contracted if you compare to the previous reading. Previous reading was like 0.9% and it's now contract to negative 0.1%. So like I say, when more people are like unemployed or they earn less, it will harm right away to the retail sales, like to the general public, right? So when you see the retail sales is not doing well, it's from the side just tell you that the economic is slowing now. Okay, so and moving on, this is a bit surprise. So this came out, I think, last week, the US GDP. So the US GDP came out much higher than the previous reading, also the forecasted reading. So this is like a mixed result, the mixed economic result. Okay, and moving on, we have this ISM manufacturing employment. You can see compare it, is lower. But for the non-manufacturing, which is like the service sector, is actually slightly better, but it's also it does came short with the forecasted number. And moving on, this is like a direct job data. This is the job opening data. It does came short than the previous reading as well as the forecasted reading. Okay, and then this is quite a fresh one. This is from Wednesday, which is like 2 days ago, the ADP non-farm employment change. This is kind of like a preview for this Friday non-farm payroll, because normally the US ADP non-farm employment change will come on Wednesday, which is like 2 days earlier than the non-farm payroll. Of course, the number also came lower than the previous reading as well as the forecasted reading. Okay, and this is like the last month. This is like October data for the US non-farm payroll. Okay, it does came much lower than the previous reading, also than the forecasted reading. So if you look at this table, it does really show you that. What does it show you? You can give a best guess, you give a wild guess. But for me, when I look at all this number, it just try to hint me that the non-farm payroll will come slightly lesser than what is forecasted, or slightly lesser than the previous reading. But of course, I'm not from the US, labor bureau. I cannot tell you. It does, sometimes it does happen, give us a surprise. The non-farm payroll come like very high and out of my expectation. Okay, this is also another reason why I don't trade right away on the first candlestick on the chart. I always observe first, see the momentum, see the direction, only I'll take action. Okay, this is what I do. And moving on, I'll just discuss with you slightly what's going to happens after the non-farm payroll, because it is next week, next Wednesday, the Federal Reserve will announce their interest rate decision. But at this time, market widely believe, about like 99% of the market participants, they believe that the Federal Reserve will just maintain the current interest rate level, which is at 5.25% to 5.5%. Okay. But next year monetary policy is still uncertain, because we all have to watch out for more economic data, including later NFP and as well as next week. Next week we'll have the US CPI reading as well. So we will definitely have to watch up and to gauge what's the next, the upcoming Federal Reserve monetary policy. But at the moment, of course, if you pay attention with the market news, because like a lot of people, already started to discuss maybe next year, first quarter, or like even before March, there's the chance for the Federal Reserve to start cutting the rates. So if the Federal Reserve start cutting the rate, it will harm the strength of the dollar. You can expect the DXY to go down. But of course, there's still a group of people believe that it will maintain until they see the inflation rate to go to near 2%, because 2% inflation rate is the favorable inflation rate for the Federal Reserve. And some of the aggressive traders, some of the aggressive market participants, they are actually looking forwards that the Federal Reserve to add another 25 basis point to the interest rate, and you can expect the dollar to goes up and the rest of those asset class to go down. Okay, because we have like an inverse relationship, right? Yeah. But for me, I believe in December, the interest rate level will just maintain at this current level, nothing changed, and they will just like to just watch the inflation rate to slowly go down, and they would. I don't think I think the chance for the Federal Reserve to raise another 25%, I mean the 25 BPS of interest rate, the chance is very, very minimum for me. This is my best guess, because I think the government, the Federal Reserve, also at the same time want to avoid the US economy to go into recession. This is the thing that they don't want to see. Okay. And also I think if you look at other economic, like the Euro, like UK, and also like China, I think all the economic are already slowing down. So I don't think they are too daring to add another 25 basis point. It will really make the economic quite like suffering. Okay, so what is DXY? So DXY is like a basket of 6 currency and compare with the US dollar. So I show you this picture particularly is because I want to tell you that if you look at the DXY, if you look at the dollar index, the most the currency that will impact the most will be the euro, because euro consists like nearly 60% with when they do this dollar index. So if you see any policy, any economic data that from US and impact on the dollar, the thing that you definitely want to trade will be the EUR and USD pair, because the impact on the euro will be more direct or more impactful if you compare to other major currency. Okay. And also, because maybe I might not with you next week, so I'll just highlight some of the very, very important economic data, and you guys can maybe watch out if you want to trade on the USD and also those USD related pairing. Okay, the next Tuesday, definitely very important, is the CPI reading. So CPI is the inflation data that you can look after. If the number you can see, if above 3%, I would say, then you can expect those Federal Reserve official, including Jerome Powell, they might comment very, very hawkishly on the CPI, because normally after the CPI came out, some of them will come out to have some speech and then comment on it. And yeah, because of course at the moment some of the board member, they are still quite hawkish. They really love to see another 25 increment in their interest rate. So if the CPI reading came higher than 3%, you can straight away close your eye and trade. You can think that you can trade on the long position on the DXY, the dollar index, and also you can short the rest of the pairing. Okay, and then moving on is the PPI. Okay, this is also the inflation gauge, and most importantly, it will be on Thursday. Thursday will be very, very busy for you guys, because Bank of England, the ECB, European Central Bank, and also Federal Reserve, all of them, they will announce their interest rate decision together. So it will be a very, very busy week. Okay, I really hope that next Thursday you guys can trade very, very well on the news. And of course, we will also focus on the FOMC statement. So in the statement, we can see is the in general, the Federal Reserve, they are now leaning towards more dovish stance, or is more hawkish. And then we will have like an insight on the upcoming Federal Reserve monetary policy. Okay, and also we have several other important economic data, including the core retail sales, including the initial jobless claim. Okay, these are the things that we can gauge the strength of the dollar. Okay, so I think I have a very limited time, but anyway, we just look at the dollar index first. So why does it happen here previously since in the month of November? So November, I think we have a very big plunge on the dollar index. This is because those economic data suggest that the Federal Reserve might not going to increase interest rate further, and market start to circulate this story, this speculation that next year the Federal Reserve actually wants to cut the interest rate. So that's why leads to down the dollar index to trade with a very high downside pressure. Okay, excuse me. But at the end, it does have it does found a support here and start to rebound. Okay, this is mainly because of the the fine tune of those economic data, as well as others currency are not doing well because they have even worse economic data. But anyhow, the dollar actually rebound from here. But what I want to say is you can look at the strength is not very strong. The rebound is not very strong, and then it does have it does suppress under 103.5 plus minus about this range. So, and that's why it lead me to this thought that later on the non-farm payroll will not be very strong and the dollar will be not very strong. And then moving on, I also want to show you that on the gold. So previously, why the gold so strong was mainly because of the weakening of the dollar. Okay, and then it does, of course, this is I would say pretty much like a market makers do this. I mean, touch like all-time high and then drop quite drastically. But after 4 big solid bearish candlestick, what happened next is the gold price actually went sideways, and it's like ease from this bearish momentum. And even if you look at the RSI as well as the MACD, it just shows that the bearish momentum ease drastically. So just stop dropping. So it does have a chance for the gold to rebound from here. And actually we have like ascending a little bit like a ascending triangle pattern as well over here. So you imagine if it does break above this current resistance level, it will just go up. So I'm not sure, just I think some of you guys are actually waiting to short the gold at 2014 or 2015. Yeah, maybe you have to wait for more signal to do so, because I also cannot 100% to tell you what is the correct direction of the gold price. Okay, but I'll do say if it does break above 2035 around this range, the gold tends to be quite strong for a while. But of course, it does sometimes have like a false breakout to to con you to trade on it, and then after that you have a big plunge. So it does what happen be like this. It do happen. So you have to definitely be very careful. Of course, do set your stop loss level. I think the non-farm payroll is going to come out soon. And also this round, especially we want to also watch out the unemployment. I guess guys, we are like because I didn't count in the daylight saving, so it will come out like an hour later. But anyhow, I'll just also go through with you guys. This round we will especially need to watch out the unemployment rate. Why is because if the unemployment rate is go beyond 3.9, it does trigger this we call Kant's theory. So it means like there's no chance for the US to step into a recession. So definitely the government doesn't want to see it. Okay. And So if let's say the unemployment rate is higher than 3.9%, it is, you can definitely tell the Federal Reserve will very, very keen to maintain the current interest rate level at 5.25. Okay, fair and square. And then in next year, they will, not doing anything in terms of monetary policy. Okay. So this time round, definitely have to keep an eye on the unemployment as well. So just not only just look at the non-farm payroll. Once again, I'm sorry I didn't count in the daylight saving no, because the time zone has changed. So it will just going to release in 16 minutes more time. Okay, so yeah, maybe perhaps after the discussion now, you have more time to make your own analysis and then also place your trade. You can either put your, buy stop or buy limit or sell stop or sell limit. That is on your own, but I'll just like discuss with you. And maybe we'll just discuss a little bit more on the gold oil price. Okay, so I would say in the longer term, especially now we are getting into a winter season. Okay. And then also at the moment, the oil prices actually found support at around $70. This is like a US oil, WTI. Okay. If a lot of people, especially next week, when a lot of major central banks they announce that they will not further increase the interest rate, especially the US, you can expect the oil price to gradually go up. Why? Because when the cost of borrowing is lower or it's not even increased, it will actually encourage more economic activity. So when this happens, it will boost the demand for the oil. So at the same time, at the meantime, it will boost the oil price. Especially also during winter time, we need energy to heat up the temperature because we are in a very cold season. It will also demand for more energy, demand for more oil. So you can expect after we get into the winter season, the demand for the oil will goes up. So I would do say, if you are not greedy, maybe the next TP will be at $72. But if you are greedy, you can actually try $75. Okay, this is my own analysis. You can take it, and of course, at the same time, do your own analysis. Especially after I see the RSI has already get up from the overbought, oversold zone, and also I do see the MACD has a cross. But of course, this is still not very convincing yet. I will do love to see more evidence before I take a position on the oil. And the next thing I'd really, really love to trade will be the Japanese yen. So we have a very, very big news on Japanese yen yesterday. The news was the BOJ governor, Ueda. He actually met with the Japan prime minister and discussed, some of the policy. So after the meeting, he came out. He gave a press conference. So in a press conference, he did say that they actually discussed, the BOJ discussed several options when they want to get out of the negative interest rate regime. So now market widely believe that they will do so before April next year. So this is like a very, very hawkish hawkish statement from the BOJ. That's why yesterday, I think it was during the Euro opening session, the Japanese yen went very, very strong, went very, very bullish. That's why you see the UJ pair actually went out a lot. So this is like one of the strongest sessions in a year. So I believe now because after a big plunge, big bearish move, it will have a technical rebound. But for me, I'm very, very convinced that in the longer run, if you do a swing trade, you can continue to have a bullish bias on the Japanese yen, and you can just have a bearish bias on those cross pairing, okay, which is the pairing that involve Japanese yen. Okay, this is it. And just touch a little bit. I'm not very familiar with the BTC, but definitely this is like a recent hype. I think a lot of people are watching the BTC, especially if you compare to the gold price, because I think the bullish momentum are the same with the the gold earlier, but if you compare to the gold price, I mean gold price retraced a lot, but for BTC it just stay firmly at at an elevated level. This is like the highest level since, if I'm not mistaken, I think May of 2022, one of the highest level, and then it's still poised around here, buoy around here. It's not moving any lower. And also, if you look at the open interest for all the contracts, all the futures or the option contracts that open, it came to a record high. So what does this tell us is a lot of institutional traders or investor that actually participates in trading the BTC. So with all this buying force, you can expect the trend, the uptrend for the BTC will be like firmly and maybe will reach 50,000 soon. This is like a very important trajectory level for the BTC to break beyond. So yep, if break beyond 50,000, it is a very, very solid signal that BTC is crazily bullish. So towards the ends of the webinar, I do love to get some of the questions from you guys, and then if I able to answer you, I'll do so. So you can type in the Q&A or just type in the chat box, see if I can answer your questions. Once again, I'm really sorry that I omitted the time zone difference, because now we are in the daylight saving time zone. So the non-farm payroll will come like about 15 minutes later. But I do hope that you guys can position your trade well and do your own analysis before you do a trade. Thanks for the support, Matthew. Thanks for questions. But if you guys have any questions, you can key in now. For a questions from Azurama, any idea of the gold spike on Monday? So you mean this one? Yeah, I think this is I would say mainly on the market makers. I also didn't expect it to be so strong. I was shocked. Okay. I did like a bit of long position, but of course like at TP, I do take TP, but yeah, if those people that didn't have TP, it does lose out a lot of the profit they make. But just look at just speak from the hindsight. Okay, you have like this very, very long upper week. It should just shows that people are actually taking profits, the sentiments. So, and then a lot of people are actually panic, so are panic selling because the price came down a lot, and it does follow by four bearish candlestick, and it's a kind of solid one. So at here, I actually expect the gold price to drop further. But of course, I didn't move, and it just went sideways. So when it went sideways, I just watch, and after that, I have this ascending triangle pattern. So what I will do is I actually will wait for a solid breakout, and if it does retrace but still firmly stay above this range, which is at 2034, I will have a position here, and I expect the trend to continue to goes up. This is, I try to play safe. I try to trade safe. Yeah, this is my idea for you. Nila advise a gold sell. Okay. Yep, you can take this into account. Apmir Kuja next week go. So next week we will do have a lot of economic data. So I will trade especially cautions on next week, because I'm not a person that really love to trade on news, because the fluctuation will be crazy, and I cannot guarantee I can protect my capital. I cannot protect my fund. So most of the time I don't trade on news. Thank you, thank you, Nitesh. Once again, thanks for the support, guys. if the impact is high on non-farm payroll from Pakistan, Metwa, yes, the non-farm payroll will have a very, very high impact on across most of the asset classes, including the dollar, including the gold, including oil, including all the pairing. But will it have an impact on BTC? I really doubt that because no, most of the time BTC just trade on it on. It always decouple on the traditional financial markets, and also it more focused on the crypto news. So most of the time BTC will not impact by the non-farm payroll. Yep. For Pakistan. A question from Hardik. How should we set up buy and sell stock for gold beforehand non-farm payroll? So buy stop is like okay, so let's say if now I do see a resistance over here. So for me, if you see that the price, I mean the gold price to go beyond 2035 is a good uh long signal, buying signal, then you can set a buy stop over here. When it touch 2035, only you enter a long position. Okay. And if, of course, the next the short, very short term support level, if you look at it, maybe about here, which is at 2015, about there. Because yeah, so if break below 2015 is like a very solid sell signal for you, and then you can open a short position at there. So open a sell stop over there. Okay, this is, yeah, you can do so. You can consider it, and then you, of course, at the meantime, you can make your own analysis. From your guest, can we get a recording of this review? Of course, we can send it through your email. But of course, if you didn't get it, you can ask from your personal account manager. I believe that they will send it to you. From Ahmad, do you think gold and Bitcoin are the roles of their price are correlated? I would say gold and Bitcoin are not really correlated, but in Bitcoin in the crypto market, they just call it like the gold for the crypto. So yeah, but I don't think the prices are correlated. From Admir, what do you think of the idea of putting a buy stop and sell stop before the market closes in case if it open with big gap on Monday? Personally, I really not recommending you to do so because the risk is very big and it's out of your control. You might be like one time wipe out your capital, wipe out your fund. This is not a very wise move. Of course, if you do have a chance to earn an handsome amount of profit, but I believe for trading is like a lifelong thing. I rather you to make small profit along the way and in the long term, but I don't want you to make a big profit one day and then you lose it out the next few session. So this is not wise. So I hope that you do take my advice. Amir, don't really trade on when the market just open. Just be more mindful with your own money. Dear, thank you. How much TP should we comfortable aim for, whether buy or sell stock? But can you be more specific on what asset class? From Rama, your oil analysis was insightful. Feds clawing back the interest rate will pump oil, but will they considering the 10 years is dumping pretty hard? You 10 years, do you mean the bond, or I'm not sure. But another thing we want to take into account when we analyze the oil price is the China economic data. I think in the weekend, China will also release the China CPI. So when if you look at the China CPI is better than expected, it means that the economy is recovering. So I do want to remind you guys that China is one single biggest oil importer in the world. So they are the biggest buyer for oil. They are the bigger user for oil. So if the economy in China is doing well, you can expect the demand for oil will pick up. Sorry, I think just now we just confronted some technical error. So I hope you guys can still hear me. I think due to the technical difficulties, I think we shall end our webinar now. We do have another session next Wednesday. I really hope to see you guys again. And then we will discuss further on what happens in the markets. And once again, very thankful for your support, and I really love to see all of you. Okay, once again, thank you, and also I hope you guys good luck and also make a lot of profit later on after the non-farm payroll release. I believe in another